My name is Cecilia Pacheco, and I am the Economic Development and Project Specialist at UNM Rainforest Innovations. Thank you for joining us today for our June New Mexico Rainforest University Center webinar. Today we have John Chavez with us, who is the former president of the New Mexico Angels and also the founder of New Mexico Startup Factory, and he will be talking about raising capital. So without further ado, here's John.
Well, great. Thank you, Cecilia. I appreciate it. Welcome everyone who's on the call or the Zoom. If you have any questions, would you please put them in the chat, and Cecilia will interrupt me and ask the question. So here's the agenda today. We're going to talk about New Mexico capital because I think that's what everybody wants to know. This capital stack in New Mexico, what does it look like when you're looking to raise money for your company? The fourth thing is angel money versus venture capital, a primer. And then the last one is keys to successful fundraising. So real quick, an introduction about myself. I am the former president of the New Mexico Angels. I raised about $20 million for New Mexico companies over 11 years. I've founded 2 venture capital funds. Phase 1 Ventures was a $1.8 million fund, and NMA Ventures was a $4 million Catalyst fund. And we are still deploying money from the New Mexico NMA Ventures fund. I'm the founder of the New Mexico Startup Factory. It's a company that we created to license technology from our technology partners, UNM, LANL, Sandia. We started 16 companies under this business model, of which 9 are still operating. We have Ozazda Energy, which is UNM technology, is creating a better paste for solar cells. T Neuropharma, which is a company from Cedars-Sinai Technology, and we are creating a biomarker for Alzheimer's. Inthentico, which is a physically unclonable function, which is a new University of New Mexico technology, and OrcTech, which is creating a cell phone booster with NASA technology, and Jeeper G1, which is a UNM technology, which is a small molecule for diabetes. Just some numbers. During the pandemic, we started 3 companies. We raised $2.16 million in equity, received $1.6 million in grants, and submitted $3.25 million in grants. So we were actually really busy over the pandemic and actually had some relatively good success. So everybody wants to know who has the money. So I'm going to give it to you, and then Cecilia can send this PowerPoint to you if you would like. So the angel groups that are actively involved in New Mexico are the New Mexico Angels. There's a website. The Arizona Technology Investors, they're out of Phoenix, and there's their website. The Desert Angels, which is out of Tucson. And then sort of an umbrella organization is the Angel Capital Association. And you can go on there and search for an angel group. And they have angel groups for all sorts of things. They have the chemical angels, they have the Notre Dame angels, they have the bioscience angels. So it's really a very good way to look for potential capital partners. And it's all on a website. So the New Mexico Catalyst Funds, this is a fund of funds model that was created by New Mexico, $20 million that was committed by various parts of the New Mexico government. You have NMA Ventures, and we are now 80% fully deployed. So doing the math, we probably have about $800,000 of additional investment. Albuquerque ID Fund, and there's their website. Arrowhead Innovation Fund out of New Mexico State, a really good partner with us. Do small investments, $50,000 to $50,000. Tramway Ventures, which is a bioscience venture fund, and Bluestone Ventures, which is out of Santa Fe, and I believe they're still looking to find their first deal. And then you have the more active venture funds. You have Sun Mountain Capital out of Santa Fe, and putting this into perspective, the New Mexico State Investment Council has deployed approximately $300 million over the years into what you call regional and local economic development venture. And Sun Mountain used to do a lot of that. It's now done by a company called Mercer, but you have Sun Mountain Capital that deploys money, Scout Ventures, really good folks at Scout Ventures, Anzu Industrial Capital Partners, Phoenix Venture Partners, and Crosslink. And a typical deal for these folks is above $1 million. So they want to deploy $1 to $3 million in probably a Series A kind of deal. So the other thing that is real active in New Mexico, and I think if you do have technology that you can fit into one of these buckets, you have SBIRs, you have DOD, DOE, NIH, NSF, and you can just Google SBIR and it'll take you to a really good information flow of what they're funding. DOE has DERMAT, EERE, and CETO, and ERE is for Advanced Energy. CETO is for Solar Energy Technology Office, and DERMAT is for durable materials for the solar space. And then you have DOD, DARPA. DARPA's always looking for good technology, willing to fund. And once again, go to the SBIR website. And then in New Mexico, you have what's called the Ascend Hub, and it's an NIH program run by the University of New Mexico that helps you apply for NIH grants. It's a really good program. We've used it for a couple of our companies, and I'm really excited because they continue to help us. And then you have the NM-FAST program by the Arrowhead Center, which will also assist you more broadly with DOD, DOE, NSF, NIH grants. And it provides value because there's a different type of scrutiny on what you're doing. So if you can get a NIH grant, that gives you a lot of value for your future investment. So selling equity. So why would you sell equity? And really it's very simple. You don't have the money to build out your company unless you bring in investors. But in order to do that, you must show value. You have to have value in order for people to provide you money through an investment vehicle. And what do you use the money for? You grow the company by funding product development, IP development, marketing and advertising, hire staff, get us a place to hang out. So that's why you would sell equity. Why do investors buy equity? Why do they engage you in a way that makes sense for them to write you a check? One is really for the financial return, understanding there's a risk dynamic. So angel investing, venture investing in startup companies is just a real risky manner. And we'll show you some dynamics of investors and why they do it because of the risk model that they have for their own money. They provide help and funding to grow a company. You think of Meow Wolf, without New Mexico investors, Meow Wolf wouldn't be where it's at today. They have connections to help you grow your company. And that's invaluable to small startup companies because you're always looking for people, advice, resources, connections. And that's the next bullet point is they help you with advice and expertise to help you succeed. So a little bit about the capital stack in New Mexico. So when you think about the small company financial ecosystem, New Mexico is actually really blessed with having a number of resources that you can go to talk about your company and talk about your vision and talk about what you want to accomplish for your company. And typically how these things start is the entrepreneur funds the company. Think about if you have your startup, where did the first capital come in? It was you either not paying for stuff or you doing the work and paying it out of your own pocket. The next step is typically friends and family. And that's where you go to your brother, your sister, your cousin, your dad, your mom, and say, hey, I got this really cool idea. I need some capital. Why don't you write me a check and I'll give you X%. And then in New Mexico, we have micro lenders. Typically in startups that are really capital consuming startups, they don't do a lot of that work. But for service-oriented startups or startups that just need a little capital to get them going, West and Accion it's actually called DreamStream now. I apologize for that. And then there are a number of new things going on in crowdfunding, and we're actually going to be using crowdfunding for one of our companies here in the near future. But it allows you to be vetted by a platform. You have to fill out a ton of paperwork. You have to show your vision and your value, and then they'll accept you to be put on their platform where they have a number of investors that typically do $100 or $1,000, and then they roll it up into one check for you. And then you have angel investors, the New Mexico Angels, the Desert Angels, Arizona Technology Investment Forum, do a lot of work within that area and really move the needle for a lot of small companies. And in New Mexico, you have the Catalyst Venture Funds. We'll go into that a little deeper. And typical check writing for them is $300,000 to $600,000. And then you have venture capital funds. And you know, the beauty about the New Mexico investment program is it brings people into New Mexico who have the capital, you know, more than the $1 to $3 million. And so there are active in venture funds, more than I pointed out, that are in New Mexico. And then you have the loans, the grants, the strategic partners that are all also available in some cases. So Cecilia, any questions that I need to answer before I move on?
Not yet.
Okay, great. So here's that risk and reward kind of idea that we talked about. So this was done by Tom Stevenson of the Verge Fund, and they are a venture capital fund that did a lot of early stage investing. And if you look at this axis right here, you have what's called the decreasing return, and right here you have the decreasing risk. And when you put the two together, you see that friends and family typically fund idea stage companies, not much money, but they get the highest return by coming in so early. But that is the riskiest money also. And then you have the angels, which come in right after friends and family. And once again, there's a business idea, a business plan, maybe a prototype, maybe some intellectual property. And typically angels do anywhere from $100,000 to $500,000. And once again, high risk, but less risky than friends and family. The government comes in, you know, they do have a lot of risk, but they don't get any return because it typically is a grant. However, you do have to deal with the government, and some that is sometimes traumatic for young entrepreneurs or old entrepreneurs like myself. You have strategic partners that always good to reach out to a strategic partner, whether it's in the materials, biotech, software. If you can get a strategic partner behind you, then that's a blessing. Typically, they provide expertise and also some capital. Then you have venture capital in the middle. And typically, you know, you're seeing $500,000 to, you know, $8-9 million. In New Mexico, we don't see a lot of these bigger deals, but we're seeing more and more. Once again, because the ecosystem has been so well nurtured over the last couple of years. And supposedly there's going to be a really nice article about the ecosystem coming out in Albuquerque Journal in next week's Business Weekly. And then sales, banks come in, banks typically don't get anywhere unless you have some sales. And then the IPO is, you know, that one thing that where you go public and everybody sometimes does well. So going to go through some of the investment that we talked about. Friends and family investment. You know, the pros, it's easy to raise because you're talking to friends and family who know you. It's the fastest to raise because typically they know who you are and they know your core person and core being. And typically you can raise, you know, 5K up to 100K with your friends and family. The pitfalls is sometimes the valuation model that they use is difficult. And so, you know, the entrepreneur will think his company is a lot more valuable than professional investors down the road. And so there might be what we would call a cram down. And sometimes everything's not documented. And if you have a friends and family round, you need to document everything, because you don't want expectations from one side to be different than the other side. And so once again, always make sure that you document all that. Crowdfunding, once again, this is getting more and more acceptable in the investment world. And you have sites like Kickstarter and Seed Invest. And typically there's two types of crowdfunding: traditional, where you get a gift, a t-shirt or something like that, or equity. And now they're sort of combining together. And so we're looking at doing a crowdfunding for OrgTech. And so we have to come up with our giveaways, our promise of a gift, a t-shirt or something like that. So we're working on that. But it's pretty cool to be doing a crowdfunding, because we've never done one before. And then the New Mexico Catalyst Funds, you have $100,000 to $600,000, and we already talked about Inmate Ventures is typically a technology fund. Albuquerque ID does mostly everything: software, biotech, materials. Arrowhead Innovation Fund does everything, also materials, biotech. Really interesting company, good folks down there. Tramway Ventures does biotech, and Bluestone Ventures does biotech. And then you have the active New Mexico venture funds, and these are Scout Ventures. They do mostly security and B2C with technology, business to consumer with technology. Anzu Industrial Capital Partners does materials. Phoenix Venture Partners does materials and software and some biotech. Crosslink does a lot of different kind of investments, and Sun Mountain Capital. And once again, typical check writing for one of these is $1 to $3 million in equity investments. So,
John, we have a question.
cool, I can stop talking.
Is there a view on the amount of out-of-state funds entering New Mexico?
So, great question. It's usually deal specific. So we are actually working with for T-Neuro. We have not opened our Series A round yet, but we're looking at $1 million from an outside investor. They just like what we're doing. We met them through a number of presentations that were done at biotech conferences. There was a company called Aqua Membranes that just received $1.5 million from an Idaho company. So there is outside capital coming into New Mexico because of really two things. It's really a lot cheaper to start a company in New Mexico, and also the valuation isn't as high as a Silicon Valley or New York or Boston or an Austin kind of company. So a lot of interesting people talking to startup companies in New Mexico from all over the United States and also from the world. So, any more questions? So, there is a difference between VCs and angels, and so I'm going to talk about that for a little bit. So, who and what is an angel? And typically they're what I would call been there, done that entrepreneurs, where they've received money in the past from investors and they're paying it forward. And so they want to see successful companies grow and germinate and hire people and sell products in New Mexico or whatever state they're in. And so they have the resources to do it. And if you think about the next bullet point, angels typically have a portfolio of investments. So if you think of a portfolio of investments as you have your real estate, you have your retirement funds, you have your public market investments. And then what we like to say is the little slice for crazy stuff: angel investments, private equity investment, venture capital investment. And the reason you want to diversify that way is because angel, private equity, and venture are really risky investments. So you don't want to be doing angel investments with money that you got to pay for your mortgage or your kid's tuition or something like that. So angel investors typically slice off a little bit of their portfolio to build a portfolio. And angel investors are always looking for good companies to impact their portfolio and then have a meaningful impact on the community and the world. You know, we started a company that's sort of struggling. It's a company called Zosera that is doing a stroke drug. And if it actually works, it's going to have a meaningful impact. The problem with the company is we need money to create data, and we need data to get money. So we continue to work on it, and hopefully we're going to get some grants coming up this next round. So some stats just for grins and giggles. The value of angel investments is really strong right now. It's about 3.5 million pre-money. And then the investment round is about $200,000. And the investment per group is typically around $200,000 to $300,000. And there's an investor or angel for anything. And this gives you an idea of the amount of money that was put out in 2018. You know, software is really big because software has really high margins, and it doesn't take a lot to start a software company. Healthcare is really strong, but it takes a long time to create a diagnostic or a therapeutic. And then you have a lot of money going into consumer products. So there is an angel group or an angel investors out there for a lot of things. So continuing around the stats, 1 in 10 startups obtains angel financing. And then as it moves through the process, only 1 in 10 angel deals see VC monies. And so once again, that risk return is really strong there. And then 80% of angel deals are seed or startup capital. So a typical deal for an investor is 10,000 to 100,000. You know, I've written checks for 5, I've written checks for 50. I haven't got up to the magic $100,000, but there are investors out there that are willing to write that $100,000 check. A typical deal is anywhere from 100 to 500. We've done deals when I was with the Angels of 50. For the Startup Factory investment model, we've done deals for 30. It really is a function of the capital needs at the time that you're trying to raise money. And if one angel group cannot provide all the capital needed, they can and will syndicate with other angel groups and venture capital. So going back to T-Neuro, you know, they have this outside investor that's looking at $1 million investment. You know, they need to raise 2.25 million. So they're out shaking the bushes and talking to people about doing, you know, $500,000 or $250,000. And then as they move down further down the path, you know, if they can get a check for 25K, they would take it. So a little bit about venture capital. As I talked about earlier, I am one. It is professionally managed risk capital. It focuses on innovation and high growth companies, and it funds new ideas where traditional bank financing cannot come into play. And it has a long-term investment horizon. And so when you hear about venture capital funds, typically they have 5 years to invest the money that they have, and then another 5 years to harvest that money. Typically it means 10 years. So with Phase 1 Ventures, we started in 2010. We still have a portfolio company that hasn't monetized. And we talked to them about a month ago, and they said it's probably about another 2 years that we're going to be holding on to that company. And until we get that company sold, there's no liquidity. So there's no dividend, there's no interest. It's just in your portfolio, and you're praying that it does make a successful exit. So what type of companies get VCs? It's usually with high growth potential. The founders that want to sell the company. So one of the things when we're working with the NMA Ventures, we say, what's your exit strategy? They address large markets, and they have IP or a leading technical innovation, and they want hands-on value-added investors. So someone that can work with them for the next round, or work with them with contacts with a strategic partner. So Cecilia, any questions?
Yes.
Okay.
We have a question here. How do you structure equity for investors' valuation and pricing per share? Is there a formula for this or general rule of thumb?
Great question. I got that at the end of the presentation. We'll take care of that. Okay. So once again, going back to the VCs, there's VCs for most stages. You have the idea stage, and that's Albuquerque ID, NMSU Arrowhead Fund, Innovation Fund. Early stage, you have NMA Ventures, Tramway Ventures, Expansion, you have Anzu Ventures, Scott Ventures, Crosslink Ventures. And then you're looking at the later stage, there's outside capital that will come in and try and put some money to work because of that you've gotten that far. And I think of Exogen, which was a company that was started in New Mexico, went to San Diego and then went public. You have Mesa Technology, Mesa Tech, which was started in Santa Fe with one of my partners from Phase One Ventures, and they went to San Diego, raised $80 million, and then were just sold for $500 million. So sometimes we start them and lose them here, but not typically. And a little bit of perspective, VCs are investing other people's money. So we have to raise money as a venture capitalist, just like entrepreneurs. So we have to go knock on doors, shake hands, kiss babies, try and get enough money to create a fund that is meaningful. And we are accountable to those, what we call limited partners, for the money that we invest. We have to be audited. The investors are going to go, are you deploying capital properly? Why aren't you deploying capital? Wait a minute, you're deploying too much. And so we are accountable for that investment to our investors. So here's a structure just so you understand how venture capital works. So think of this as NMA Ventures. And then we have the investors. So you have myself, Sherman, you have other investors. Oops, sorry about that. Page up. And we have the state of New Mexico. So we have $4.2 million. We have it in our fund, and then we put it into these companies. And we've done $600,000 into Everyday Contacts. We put money into a couple other companies. So now we have our portfolio. And then we continue to manage that. We have a little bit money held back if they need additional resources. But the venture fund is taking money from investors, putting it in the fund, and then deploying it out into the marketplace.
John, we have another question.
Sure.
First of all, they're saying thank you for your insights. But the question is, what in your experience makes the difference between spinning your wheels, seeking capital, and finding that sweet match?
So one of my partners from Phase One Ventures always says he has to kiss a lot of frogs before he gets to his prince, right? And it truly is. Venture capital, angel capital is very discriminating. Given the numbers, I think the numbers are there's 678,000 companies started in the United States every year, of which 60,000 get angel investment and only 3,000 get venture. So think of the math on that. It's very difficult to get investment. And once again, I'll talk about that in more detail, how you successfully go out and present your deal to investors. And some of the things that I've learned over the years, because one of the things I get every day, got one today, nope, we're not interested, thank you for playing it. So, or nope, we don't want to meet with you, we got 3 things in front of you, and if we fund all 3, we don't have any more capital. It's just the nature of the beast. You have to be willing to say, take no, and then recommit to what you're doing and figuring out why they said no. So some key points that VCs evaluate. They talk about the team. Is it investable, coachable, aligned with the venture? And are they passionate? We've had deals where you want to fall asleep. And that's not passion. You want to get up and say, yeah, go, go, go. So, you have to be passionate about what you're doing, but also coachable. The market, is there value to customers in the product? Does it have a high margin? Does it have a high growth potential? And then the financial piece is there a return potential? And can my money make a difference? Can it move the needle for the company so that we call it a value inflection point? If I put a $250,000 in a company, is it going to make the company more valuable if they use the resources as they said they were? And then the technology, is it scalable? Which means, can I make a lot of it and sell it and have high margins? And the second piece, is it defensible? Do I have a patent or a secret sauce that no one else can come in and claim what I'm doing because I'm the only one that can do it? Those are the things that both VCs and angels look for. So a little bit about the keys to successful fundraising. And once again, going back to my partner at the venture fund, kissing a lot of frogs to get to your prince. So what you need to start the conversation is an executive summary and a pitch deck. First and foremost, every business plans are sort of going away. You need to think about having a business plan, but having an executive summary and a pitch deck are the key communication tools for the investment world. And for assistant, you can talk to Cecilia, the Arrowhead Center in Las Cruces, NM Activate, and CNM Ingenuity. So those are tools that you can use to help you do your executive summary and your pitch deck. So what do investors want to see and hear? So they want to hear a lot about the team. History, experience, passion, what is the team about? And if it's just you, they're going to say, go get a team. So if you start with just yourself, it's going to be a challenge to get additional investment. But if you start with a team, then the investors are going to be more open to that conversation. Do you have intellectual property to protect your product, your market? Is it a patent? Is it trade secrets? Is it secret sauce that no one else can know? Because there is value there. What kind of product are you going to build? Is it easy to build? Is it hard to build? Is it going to take a lot of money to build per unit basis? And can you sell it for a lot more? So how scalable is that product? The next one is, how big is the market? Is it small, so you can only sell 1 or 2 a year, or is it humongous where you can sell tons of it a year? So we have G1, which is a diabetes therapeutic, right? The diabetes therapeutic market is like $30 billion a year. And ours is a new type of drug. And so we can slice off a big chunk of that, but we have to go through FDA trials and trials and trials and trials. So it's a 7-year plan to go to market. But once we get there, there's a big market. What's your plan and your financial model? Investors will always say, okay, we're going to give you 150 to do this, this, and this. Then what? Well, I'm going to have to go raise 750K to do this, this, and this. What's your financial model? Seed investment, convertible note, Series A, Series B. Reasonable valuation. What does that mean? If you look at an average valuation for early seed stage companies, it's $3 million. Are you special enough to get to 4? Or is there something that maybe only take you to 2? If you go in and talk to an investor, and I had a conversation with a guy the other day, he's looking for $50 million Series A seed round in New Mexico. And it's like, it ain't going to happen. Just because the modeling that the investors will do, they'll kick you out. And look at team again. It really is about the team and the passion, the drive. What are you trying to accomplish? And are you going to spend a lot of time and effort on doing this? So that's what investors want to hear and see. So how do I start the process? When I typically want to raise money, I say, what is my financing goal? How much do I need to raise for this period of time that I want to go out and talk to investors? It's really that simple. And then I say, what are the financing path I can go down? Can I go get equity? Can I go get grants? Do I need a combination? How do I get to my financing goal? And then I create my investment documents. And this is the answer to the question. It really is a function of your valuation, how much you're going to raise, and what structure. So every deal is different, and every price point on your shares are different, because it really is a function of how many shares you have outstanding and issued, how much you're going to raise, and how many shares you have to issue to do that. Or you can do a convertible note, and that's just, I'm going to sell notes, and then I'm going to deal with all the equity stuff in the future. So once again, the answer to the question is, it really is a function of what is your financing goal, how much you're going to raise, what does your cap table look like? And then I always say, I need to identify investors. And so the question is, who are the investors? You know, you have 12 venture funds, you have angel groups. You say, who am I going to present to and how am I going to do that? And then you say, those are the people that I'm going to go talk to. You create a CRM or a spreadsheet to say, these are the 15 people I'm going to talk to, and I'm going to keep track of my contacts with them and keep track of my feedback. And then set up a plan for engagement. Do I call them? Do I email them? Do I sit outside their office and run into them accidentally to talk to them? You know, it's really about how do you set up that plan? And then you execute. You go out and do it. You send out 15 decks. You send out 15 emails, executive sundries. And then you say, oh, no one called me back. Why? Review, feedback, adjust, and then go execute again. And once again, think of the partners that we talked about. UNM Rainforest, Arrowhead, CNM Ingenuity. Those folks can help you with your structure and things like that. And there's other accelerator programs out there. So there's always opportunities for people to help you. And then how do I engage? You know, when pre-COVID, there were local meetings of investors, of all sorts of things, and those are coming back. So always go out and shake hands and talk to people about what you're doing, because you never know when somebody's going to go, wow, that's pretty interesting. I have someone that's doing something similar. Maybe we can connect that. Networking connections. Use LinkedIn. LinkedIn is a really good tool because it allows you to connect to people. And, you know, I get those things all the time. Sometimes I'll connect with them and sometimes I won't. You know, you can do website searches and reach out to those individuals. Ask for a meeting and ask for something. One of the things I always find about entrepreneurs is they get to the end and they say, thank you. And, you know, one of our companies, we talked to the CEO about, you gotta ask, so that when we get to a pitch thing, she's getting better about asking, but sometimes we elbow her in and say, here's what we want from you. So always ask for the meeting, always ask for the investment. And then creating the company information and documentation. You know, think about the pitch deck, think about the executive summary. If you get into due diligence, you're going to have to create a deal room. That's going to include your financials, your deal deck, your customers, your contracts, your market studies, once again, your financials, your tax information. So if you are getting some traction, think about creating a deal room. And that's what that was supposed to create, a deal room. I forgot the room on that. And then just continue to follow up. You know, I've always, you know, if you get a no, that's good. If you get a yes, it's even better. Getting maybes is not a good thing because you have to continue to follow up. But you have to do that because you never know when someone's going to go, oh yeah, I remember that. Let's have a conversation. So with that, Cecilia, I am happy to stand down and answer